Good morning, guys. This is Mr. Roxy coming at you live from Palm Beach in Florida. It is Monday. It is September the 19th. And today I want to talk about Icahn, specifically Icahn Enterprise Partners. There is a reason why I keep buying Icahn. And one of the reasons is because I'm an old guy. So I need to ensure that I have some wealth preservation, as well as producing a reasonably good return on my investments. And one of the ways in which we can do that is by reinvesting dividends. And I've spoken about that many, many times before. I've also talked about Icahn Enterprise Partners many times before, but I've never really done a sort of, let's call it a shallow dive, because I'm not going to go into the fundamentals and look at the balance sheet and the income statement and stuff like that. But I am going to dive a little bit deeper into Icahn and tell you why it is that I keep buying Icahn and show you what it is that Icahn Enterprises does for me. So if you're not familiar with Icahn Enterprises, by the way, the ticker symbol is IEP, trades on the NASDAQ exchange in the United States. Icahn is a diversified holding company engaged in 7 primary business segments: investments, energy, automotive, food packaging, real estate, home fashion, and pharma. That means that Icahn is almost like a diversified ETF, except in this particular example, because I hold the master limited partnership shares or units, it's not like an ETF, so I don't incur any fees. I just hold the stock and collect the dividends. So let's go a little bit deeper into Icahn and see what's going on here. Of course, most of you would be familiar with Carl Icahn, even if it's just because you've been following my Occidental Petroleum videos over the past 2 years or so, where, of course, we saw Icahn take a couple of seats on the board, have some public fights with Vicky Holub about the acquisition of Anadarko, and then, of course, his exit from his long holdings that he held for about 2 years or so. Very recently, in fact, at the end of last year, Carl appointed David Willetts as the CEO and managing director, basically, for Icahn Enterprises Limited Partnership. Prior to that, David Willetts was the CFO, the Chief Financial Officer of Icahn Limited Partners. So he's not new to the organization. He's just got a new role, stepping into the role of CEO. Let's take a look at the snapshot of the company here. You can buy Icahn. I'm not sure at what time this morning I took this snapshot, so I don't know what the price is, but you can buy Icahn for about $52. It's not a small company. It has a market cap of almost $17 billion. Arguably, based on its 52-week range, it's not a bad buy right now. It's sitting just left of center on that 52-week high little scale. So, it's kind of cheap. How cheap? Well, we don't know looking at the PE because it hasn't been profitable. However, here's the primary reason why I buy Icahn, and I'm going to show you why in more detail in just a second. Icahn pays an annual dividend yield of $8, which is $2 per quarter, which based on the current stock price of about $52 is yielding approximately 15.5% on an annualized basis. The next dividend pay date, in other words, my next dividend pay date, is coming up really soon. It's going to be on September the 28th, as you can see down here at the bottom of the screen. And further to the bottom of the screen, you can see that 87% of the institutions, and for that purpose, I'm almost like an institutional investor as well, hold Icahn Enterprise Partners. It's a foundational stock for me. I've had the stock in my portfolio for a long time. And you can see also right at the bottom in the center, nobody's really brave enough to short this thing, even though it's not really profitable. You got to be crazy to short Icahn. In fact, if anything, you either want to do nothing, stay away from it, or just go along like I did over many, many years. And I'm going to give you some daylight on that one in just a second. Over the past year, Icahn has been riding the same ups and downs as the market, but it's actually been outperforming the Dow Jones and the S&P 500 over the most recent 1-year period. TipRanks has Icahn at a 10 outperform. I attach no value to this because it's based on the opinion of one analyst, so we can ignore that one entirely. So what's going on here? So what I've done is I've taken a snapshot of one particular account that has one position. So this account, which has a balance of $7,193, was actually opened with a $7,000 cash investment, of which approximately $6,500, so $6,500 more or less, was invested in one stock only, which is Icahn, because the rest of it is still in cash, $450, right? So the account was opened with $7,000. It holds $450 in cash, and the rest is in one position, which is Icahn Enterprise Partners. That position acquired 130 shares at $57. The current price is only $51 and a few pennies, as I said a few minutes ago. So this account effectively is negative. And over here on the right-hand side at the bottom, you can see that the account is down $686, which is approximately 9 and a bit percent negative, right? So the account was opened with $7,000. It's lost almost $700, which is almost 10%, yet the balance of the account is $7,193 as of today, which means that the dividend, which is so rich, has actually not only covered the pullback on the stock price, but actually even added some. So the account is up $200, even though on the single position that it holds, it's down $700. I hope that makes sense, right? This particular individual opened one account with one holding with an opening deposit of $7,000, invested $6,500 in Icahn, kept the other $450 in cash. And even though Icahn has pulled back almost 10%, the account is still positive because of reinvested dividends. Let's take a look at what this looks like in a little bit more detail. I'm looking at the unrealized gain, long positions. And over here, you can see Icahn is the only position that the account has. 130 shares were acquired or purchased at $57.16 per share. We know Icahn is only trading at $51 something. The cost of the buy-in on this Icahn position was $7,400. It's down almost $700, but yet the account balance, as I said, is positive. It's not short any position in general, but certainly not short Icahn as well. I wouldn't short Icahn. I'd either go long or just stay away if you don't like it for whatever reason. How about 2022? So if we look at this year to date, and remember I said a minute ago, on September 29th, the next payday is coming up. But for this particular account, this account shows you the partnership distribution. And this is obviously not the same account because now the amounts are much greater. On April the 27th, there was a partnership distribution of $4,100. And on the same day, 77 shares were bought at $53. A couple of months later, on June the 29th, there was a partnership distribution of $42.90. Why has it gone up? Because the account now has more units or more shares of Icahn Enterprise Partners. So every single time there's a dividend distribution, you're earning more dividends because you're earning more dividends on the stocks that were added to your account from the previous dividend, right? So on June the 29th, there was a distribution of $4,200, $42.90.34. And on that same day, another 88 shares of Icahn were bought at $48. So in addition to reinvesting the dividend, you also cost averaging, right? So 2 months prior, it was trading at $53, and 2 months later, it was trading at $48, but you're cost averaging, so you're getting more shares. So at $53, we only acquired 77, but at $48, we acquired another 88. So it was almost 100 shares extra. And the next line on here will be on September the 29th, there'll be a partnership distribution again, and on the same day, there'll be another buy of reinvested dividends. What does it look like over 1 year? Now, the first thing that you can see, if you can kind of follow along this page with me, it says buy, or past tense, bought. There are no sales, right? So what we're doing here is we're just adding to Icahn month after month after month. We're just buying more. So in April, there's a partnership distribution. We bought reinvested dividends, $57 per share. And we also added some, a direct buy, 350 shares. Then the very next month, we bought some more shares with our dividend distribution at $56. See the price is going up and down. It's trending down here. And we added some more direct buy again at $56, another 150 shares. Then a couple of months later, Icahn pulled back even more. So we bought another 375 cents shares at $54 each. Then there was a partnership distribution in that same month, and now we were buying more Icahn shares at $50. And then in December last year, we bought some more Icahn shares at $49. But look what happens with the dividend distribution. At the beginning of the year in April, we bought 28 shares. The next dividend distribution bought 43 shares. The next one, 55 shares. The next one, 73 shares. You see where I'm going? This is compounding. This account is compounding in leaps and bounds. Now, you may recall, because I've shared this with you before, if you can achieve 15% per year as a return on investment, your account balance can double every 5 years. That's just math. Now, if the stock, in this particular example, Icahn, is paying you a dividend of 15%, then you don't even have to worry about the stock doing its usual up and down thing. You already are stocking away 15% per year. So this could be very, very lucrative if you compound by reinvesting your dividends, in addition to perhaps buying low as we're doing here, adding to the position and just building the position over time. Back to the small account, even though it's less than $7,000 invested, it is generating an annual income of $1,040 on an annualized basis. Now, that's based on the fact that the account holds about 130 shares of Icahn. But remember, every time we reinvest the dividends, the number of shares we hold is going up also. But this account, with even a relatively small investment of $7,000, is already generating over $1,000 per month, on an annualized basis. And you can see the spikes, September, December, March, and June. That's when the dividends get paid out. So every 3 months, you're adding whatever the value is on a quarterly basis. In this particular example, just over $250 per quarter added to the account just on dividends. What if you had a larger position? So in this particular account, we have 2,233 shares that were built over a period of time. This particular account is generating just on dividends, $46,000. So now we're talking about a salary, right? And you can see the spikes when these dividends pay out. And you can see the largest contributor over here is Icahn. Interestingly enough, the second largest contributor is Energy Transfer. And you will recognize some of these stocks because I talk about them frequently. Icahn Enterprise Partners, Energy Transfer, AllianceBernstein, AGNC, which is a REIT, and Occidental Petroleum, your favorite stock and mine. But you see where I'm going? You can compound over time. Look at the valuation of Icahn. The most valuable thing that you can look at here, because there's no price to earnings or PE ratio available, is price to sale and price to book. It's lagging the industry. So on a price to sales basis, Icahn has 1.5. The industry is almost at 3. So it's underperforming significantly, a little bit closer on price to book, 3.5 times versus the industry's 4.5 times. But this is not why I'm buying this particular stock, right? The dividend analysis, I've now shared this with you in great detail here, pays an annual dividend of $8, but quarterly, every quarter you get $2 per unit that you hold, per stock, individual unit that you hold. So 2 times multiplied by however many shares you hold, which is currently producing a yield of about 15.5%. So more than 15%, which means just on dividends alone, I can almost double my position every single year. There's the annual dividend yield of 15. The industry is yielding under 3. The dividend change is irrelevant because it hasn't changed much. It's been at that level for quite some time. And the dividend growth over the last 3 years, not really significant, but of course, it's always been relatively high. Icahn, unlike Berkshire Hathaway, for example, Icahn actually rewards shareholders on an ongoing basis. Comparatively, Berkshire Hathaway pays no dividend at all. How about growth? You know, it's not too bad. It's okay on a trailing 12-month basis. The earnings per share is around 32%. The industry was negative. Revenue growth for the most recent quarter didn't look good because it was down 12% and the industry was up 3%. However, over trailing 12 months, so TTM, trailing 12 months, the industry was up 3.5% and Icahn was up 27% in terms of revenue growth. Not too shabby. About the financial strength analysis for Icahn. So it has a lot of debt, which is 41% in terms of its debt to capital ratio, and the industry is at 48%. So it's actually got, relatively speaking, less debt than most of its peers. The change in debt, so Icahn's debt has actually not changed much because the little blocks in the middle of the screen here are a little bit deceptive. The black little line is the industry average and the gray block is Icahn. So it looks like it has added a lot more debt than the industry average. But if you look over on the right-hand side, you'll see it went from negative 0.08% compared to the industry's 0.15. So nothing there. You know, I always look at debt. Now, we talked about the debt to capital ratio, which is around 41%. About the quick ratio, the quick ratio shows you how much cash the company has compared to its current debt. So Icahn doesn't have enough cash to pay its current debt. Of course, it could liquidate some of its positions at any given time, or otherwise generate some money in other ways, because this is a very diversified conglomerate, and it has no problem necessarily raising cash, even if it's cash through debt, which is not advisable, but it's not holding enough cash. Its interest coverage right now for the most recent quarter is not good. So we need to look at it when you look at the fundamentals more on an annual basis in terms of what that yield might be. So guys, that is like a sort of a quick flyover of Icahn Enterprise Partners and the reason why I have such a large position of Icahn in my personal portfolio and in multiple accounts. So I don't only have Icahn in one account, I actually have Icahn in several different accounts. And I just buy it and hold it and leave it there. I don't do anything with it. I trade on other stuff. Sometimes, I trade in and out of different positions. I have some play money. The play money for me right now is mostly uranium. It's still energy, right? Because energy is pretty much the only sort of sector that I want to be invested in right now, or where I want to make buys. There are a couple of banks that are cheap as well, so I've been buying some banks. But in a nutshell, that's kind of where I am, and that is why I hold Icahn, and that is why I keep adding more Icahn. I hope it's helpful, at least to somebody. And on that note, this is Mr. Roxy saying thanks for watching. I will talk to you soon. Goodbye for now.